Hi everyone, I'm Anthony Molinaro.
And I'm Timothy Jagger from O'Brien Blackburn with the 8th edition of the Monthly Property News for 2024. Where as always, the property news is on the house.
Now, underlying inflation numbers came in at the end of July at 0.8%, which is marginally below the expectations of a 1% increase, which is great news because this is the specific inflation number that the Reserve Bank of Australia watches the most. Now, annual inflation is now tracking at 3.8%, but the Aussie stock market rallied on the news of these inflation numbers and had its biggest day on the market for this calendar year. Now, likewise, July was the biggest month for the year, and the Aussie market hit an all-time record high. Now, with the encouraging inflation numbers, the commentary from some economists is actually talking about a rate cut, which might be on the cards later this year. And in fact, the Commonwealth Bank is still predicting a November cut. Now, in the US, well, they kept their rates on hold for August, with the prediction from them being September the month where they see a rate cut. And across the Tasman, Tim, well, our friends at New Zealand, they are predicting 3 rate cuts before the end of this calendar year.
Geez, hopefully that happens here. Now, nationally, average dwelling values climbed by 0.5% in July, which was the 18th consecutive monthly increase in house prices. Bucking the trend is Melbourne yet again, with a 0.4% decline in July, which makes it a 0.9% decline for the quarter. Now, Melbourne's median house price for combined dwellings sits at just above $780,000, which is the 4th highest in the country for a capital city, and now only sits approximately $5,500 above Adelaide and $8,500 above Perth.
Now, with the number of homes for sale in Brisbane, Adelaide and Perth more than 40% below average for this time of the year, this is the main cause for the price increases. It's a different story here in Melbourne, where through the late autumn and winter months, the listing numbers are well above average, which is the reason why prices have retreated for the last 4 months.
Now, the auction market during the month of July, according to the Real Estate Institute of Victoria, was its busiest July since July 2021, with more than 2,102 auctions, recording a healthy clearance rate, 78.75%.
And rental yields, Tim, well, they're holding really well here within Victoria, and indicators of lending is showing confidence from investors who are returning to the market. The Australian Bureau of Statistics stating a 3.4% increase in investor lending.
Although the rate of rental growth has slowed a little, the rental market is still very strong. The 10-year average for rental growth pre-COVID was 2.7%, and we are now comfortably sitting around double that growth and some more. Our national building approvals released at the end of July shows a 6.5% decline for the month, with Victoria recording a 13.5% decline. While new housing supply remains scarce, investors certainly are enjoying the rental price growth.
Now, that's all for this month from Tim and I. And remember, the information provided is of a general nature. You should always seek independent legal, financial, taxation, or any other advice in relation to your unique circumstances. Thank you so much for taking the time to watch this month's Market Wrap. And until next month, it's bye for now.